What's going on, penny boys and gals? It's your boy, What the Duck here, and it is time for another trading class video. So we already went over the parabolic SAR indicator, the ATR, the ADX, and the DMI, and these are all indicators that Wallace Wilder invented. Another one that he invented was the RSI, and that is going to be the theme of today. So, RSI, it can show you oversold and overbought conditions in a stock or in the market. As you can see, the RSI is on the bottom, is a subchart, and it's this blue line or whatever line you decide to make it in your settings. But here is the RSI. Basically, the easiest way to explain it is that if the RSI is under 30, it is oversold. If it is over 70, it is considered overbought. Typically, traders like to buy when the stock is oversold, and they'll sell when the stock is overbought, but it's not that easy. You also have to look at other indicators to determine trends, as well as divergences in the RSI, and that's what we're going to be going over right now, because the RSI isn't just oversold, overbought, oversold, overbought. There are some other things that go along with it. Right here, we have an example of a bearish divergence. So what does that mean? Well, as you can see, you have the stock here, and then it comes right back up. So you have a new high. So you have this trading here, and you see a new high. However, even though the stock is going up, the RSI is actually not showing you a new high. So what you really want in a strong trend is for the RSI and the price to kind of stay consistent. If you see a new high, you want the RSI to show a new high. If it does not, so this is showing you a new high. This price is more than this price. However, the RSI to a new high. The RSI stayed below where it was trading at here. Even though the price is higher here, the RSI is actually lower than it was over here. And that is a bearish divergence. It's showing possible bearish energy because the RSI is showing that it might be bearish because it's not going up along with the price. As you can see, the stock actually started to go down after that. We also have bullish divergence. One example of that right here, consider a bullish divergence. You see how you have a low, but then a lower low. Over here, you see the RSI is all the way down here. But even though the stock goes lower, the RSI goes higher. You can see it's hitting lower lows, but the RSI now is going up. That is showing a possible bullish divergence, which is a bullish sign, which could be a buy signal. And in this case, it would have been because the stock went up. So you have a new low, but the RSI is actually going up, and that is a bullish divergence. Another example of the bullish divergence is that you can use the double bottom RSI divergence. So here you can see that you had a new low that was trading here. This is a new low, but the RSI did not show a new low. It actually showed a double bottom. And this is a bullish divergence because even though the stock's going down, the RSI is showing, in theory, a support right here. And then as you can see, the price went up. So basically you have a bunch of different types of divergence that you can use in the RSI. You have, well, one is bearish, one is bullish, but there's different types as far as those bearish and bullish divergence go. So you have the bearish one where your price is making a new high, but the RSI is showing a new low. You can also have one where the price is showing a double top, meaning it hit one level, came down and hit the level again, but the RSI is going down. So even though the price is showing a double top, the RSI is going down. That is bearish. Or if the price is going up and the RSI a double top, that would be a bearish divergence because the price is going up but the RSI hit that resistance in theory and it didn't go up with the price, and that's bearish. And I have examples of all this in our handouts, which you can find in the free trading class area right here, and I'll have all the handouts to all our free classes there. We also have the bullish divergence, which is basically the opposite. So the price is making a lower low, price is going down, but the RSI is going up. That's a bullish divergence. That's showing bullish energy. Or if the price hits a double bottom, but the RSI keeps going up, that's another version of a bullish divergence. Or if the price is going down and the RSI hits basically a support and does a double bottom, like basically the RSI hit a support and the price continue to go up, that's bullish. So if you have new highs, you want the RSI to show new highs. If you have new lows, you want the RSI to show new lows. So if the stock goes down and the RSI either double bottoms or is starting to go up, that can show possible bullish energy, and the other way around. That is the RSI, and like I said, we are going to go over some other indicators. Let's go to just another random stock. So we're going to go to another indicator that we can use. We're going to go right here. So let's go ahead and look at all the other indicators that were invented by Wallace Wilder. So we're going to go to edit indicator. indicators, remember we were talking about the ATR, we were talking about the SAR indicator, we also have the ADX, the DMI. We have 1, 2, 3, 4, that's all 5 of the indicators we went over that were invented by Wallace Wilder. The RSI, which shows oversold and overbought conditions. We had the ATR, which measures volatility. Then we had the ADX, which can show you the trend strength. And then we had the DMI, which can show you the trend direction, as well as the strength, because the DMI actually has the ADX in it. And then you have the SAR indicator, which can show you possible buy or sell signals, as well as a trend direction. So in this case, let's go ahead and look at the daily chart, and let's go right here. So first things first, let's look at the RSI. So the price went down, RSI went down with it. Price is now going up, RSI is going up with it. That's pretty healthy. It's not showing any divergence. Right now it's at 46.17. Remember, 30 and below is oversold and 70 or above is overbought. So right now it's kind of towards the oversold area, which means it might be a good buy if the other indicators also indicate that. So if you look at the SAR indicator, right now it is currently looking like it was in a downtrend, and it is now trying to do that uptrend, because the green dots are showing bullish energy, the red dots are showing bearish energy. So in theory, it's a little bit oversold, currently trending up on the SAR. That's so far a good thing. Average true range is just showing you volatility. So right now, if you scroll out a little bit, you can see that the average true range is actually higher than it usually is, which means that the stock is showing signs of volatility, which means you might want to be careful if you're going to get into the stock, because it can go up or down pretty dramatically when it is volatile. And this is one way of using the ATR to determine if, A, the stock is worth getting into, but B, if you should be careful getting to the stock, or if it's, consolidating, which means you might have some time to build a position. That's what the ATR is showing you. And you can also on the daily, what I like to do is, so you can look in the daily, it's 1.43 is the ATR, which means the price moves around $1.43 on average in the past 14 days, which we went over. And then you can look at the current stock movement, and it looks like it went down $1.20, which is kind of similar to 143. It's close. So the stock today traded around what it should be trading on average. So that means that, it's not that on the day, it's probably done going up or down on a crazy fashion, because, let's just say that the ATR was 4, it only went up or down $1. That means that there still has some room to go. But as you can see, even after hours, it only went up a penny. So it pretty much moved almost similar to what its average true range is, which means it probably doesn't have much more room to go up or down unless there's news or some type of event. But yeah, I like to use the ATR to see what possible movements I can get, especially if you're trading options. You can see, all right, well, this can go up or down $2. So you can assume maybe I'll get an option, if you have an option expiring in a few days, maybe I'll get an option that's only $1 away, or $1.40 away. That's another way of using ATR. But of course, options are very risky, which is why we have a Options 101 class in Pennybois University, which is definitely worth checking out. So ADX is just showing you the trend strength. Remember, if it's over 20, it's showing a strong trend. If it's under 20, it's showing the weak trend. Right now, the ADX is 37.33, so it actually is showing a pretty decently strong trend, and looks like it is currently trending up according to the SAR. Another way to see if it's trending up or down is using the DMI. So you do have the ADX in there. You also have your plus and your minus signs right here, your D plus and your D minus. As you can see, when the price is going up, the D plus is on top of the D minus, and this is what you want. When this price is going down, it reverses. So right now, it looks like the D minus is actually on top of the D plus. So this is actually showing that it's currently on a downtrend, and it's 37, which means it's actually on a pretty decent downtrend, unless the ADX continues to go down, because there might be a possible reversal coming and it might start trending up. But you can also use other indicators as well to confirm this, like for instance, the MACD, which I like to use for, or even TSI, which I like to use for trend strength, but which we went over in our bonus class. MACD we go over in Pennybois University. Actually, the MACD is also showing that it is actually, the MACD line is above the signal line, so it's a good thing. So the MACD is actually showing that, the trend did reverse. The MACD is confirming the SAR indicator, whereas the DMI is a little bit slower to react, it looks like. But ideally, this plus sign is going to cross above the purple minus sign, and the ADX, the yellow line, will, ideally start going up, showing a strong uptrend. Here, the MACD. So this is how you use there's 5 indicators together. So same deal. We're going to go on the 1 hour. So you can use the SAR to see if it's currently showing a downtrend or uptrend. And the SAR is showing downtrend, but that doesn't mean that it is a downtrend. You want to use other indicators to confirm. You have the RSI. You see the stock is going low. It's finding new lows. RSI is finding new lows with it. So there's no divergence going on here in the RSI. but it is on near the oversold area, which is usually a good thing as far as buying goes, as long as you see a reversal coming. You have the ATR is showing high volatility than usual. Right here, it wasn't showing a lot of volatility, it was kind of consolidating, but now it's starting to go up, which means it might start making some sudden movements. As you can see, it did right here with this big candle. ADX is actually going down, so it had a strong trend, and as you can see, the trend up was pretty strong, but now that trend is starting to either weaken or reverse. Or this is showing to show volatility, which we go over in our ADX video. The ADX can show multiple things depending on what number it's on. If it's below 20, it means it could either be showing volatility, it could be showing reversal. And then the DMI right now, hard to see, but it looks like the minus line is actually underneath the plus line, showing an uptrend, but it looks like it might be reversing soon. ADX is coming down, showing possible reversal. And once again, go to the MACD, which we go over in Pennybois University in full. And the MACD is actually showing that it is on the downside, but it looks like it might be trying to reverse, which would kind of confirm what you see in the DMI. You're hoping that the MACD will continue to reverse, the DMI will continue to reverse, and it will start showing an uptrend. Actually, the DMI right now is showing an uptrend. What you want is for it to bounce off of that purple line. You want the green line to bounce off of it and keep going up. So yeah, that is basically some basic, easy ways of using these 5 indicators together. You can use, like I said, the SAR will show you the trend direction, if it's going up, if it's showing bullish energy, if it's going down, if it's showing bearish energy. RSI shows you oversold and overbought conditions. The ATR shows you volatility and around how much the stock moves per 14, in this case, hours or 14 days. ADX shows you trend strength, and it can also show you if the trend or if the stock is showing volatility, or if it's showing a reversal. And then a DMI can show you which direction the trend is going, or if there is reversals in the trend. So these are all different types of indicators. They show you all different types of things. You don't have to use them. You can use, instead of the DMI, you can use the MACD. Instead of the ADX, you can use the TSI. Instead of the ATR, you can use the STDV indicator. Instead of the RSI, you can use the CCI. And these are all other indicators we go over in Pennybois University and in these bonus classes. So check out the free trading classes once again, the free trading classes, and there it is under free trading classes, and these get updated all the time. Well, that is our bonus indicator video going over 5 different indicators that Wallace Weiler invented, and they all show different things. I think you want to use different indicators together. So if you want to learn more, of course, you can join us at Pennybois University. We do have a whole month going over charting, part of our 3-month trading class program, so definitely worth checking out. So I hope to see you in PBU. However, until then, I hope that you all make some bread.